Greg Hunter, and this is the weekly news wrap-up for Friday, August 19th, 2011. 400-point drop on the Dow. 5% down on the S&P 500, and here we go again. For all you people out there wondering what's going on, I thought this was all fixed. Two things. A, nothing has been fixed. We have phony accounting propping up the banks. We're still printing tons of money. We just went another $2.4 trillion into debt. For example, we're propping up the banks by, Bank of America got another $73 billion of its toxic mortgage debt taken off its books by who? Taxpayers. Fannie Mae took it off Bank of America's books. That's here in the U.S. This is a monumental problem here in the U.S. On the other side of the Atlantic, in Europe, they also have too much debt. Now, they've been trying to buy the bonds of Spain and Italy and loan money to people like Greece, and Ireland needs more money. Well, listen, the big dog in Europe is Germany, and they have a little history with inflation and hyperinflation and printing too much money. And they don't want to do that. They want every state that uses the euro to have a balanced budget. Well, that's going to require a lot of cutbacks and a lot of austerity, and who knows if the euro will even survive, but that's how the Germans want to handle it. On our side of the Atlantic, we're printing money like crazy. And so, either we'll have deflation in Europe or inflation here in the U.S. Either way, gold does well, and maybe that's why gold is hitting another all-time high. Well over $1,800 an ounce. Gotta warn you, this is a parabolic rise. This could go way up, and there could be a correction, and it could go down 100, 200. Who knows if it'll go to 2,000? I don't know. There was a report out by one of the big banks. They were looking at gold to be 2,500 by the end of the year, but expect big corrections for big increases. But overall, the trend for gold is going up. But just expect some big corrections. People should have gold as an insurance policy. They should have physical gold and silver, and that's the way I look at it. I'm not a trader. This is not Kramer. I don't give trader talk. You should have it as a core asset and hold on to it. Now let's take a look at what's going on with the United States back here in the U.S. is that the economy is not doing well. We just had another manufacturing report that turned negative out of Philadelphia. Now, the Fed governors are all meeting in Jackson Hole, Wyoming, for their annual meeting. And I think what they'll see is a very bad economy. If we keep having these multi-hundred-point drops in the Dow, if we keep having negative information in the economy, I think when they're finished having their meeting at the end of August, beginning of September, they'll probably be announcing another round of money printing. That's the third round of quantitative easing. Let's just call it QE3. And just to let you know that the economy is not doing well, not just manufacturing numbers are bad, but unemployment numbers. Remember that last week? The big mainstream media buzz was, we're going in the right direction. We had less than 400,000 people apply for unemployment benefits for the week. That was the good news. A little less than 400,000 people lost their jobs and were applying for unemployment benefits. Well, what a difference a week makes. This week, 408,000 people applied for unemployment benefits. So much for heading in the right direction. The economy is in trouble. And take a look at inflation, even core inflation. That's minus food and energy. I don't know what world that the Fed lives on where they subtract food and energy, actually the Bureau of Labor Statistics, but even core inflation is going up. The increases in food and energy are showing up in the core rate. So the official inflation rate is 3.6% in July. According to John Williams at shadowstats.com, he's an economist, he says if you did inflation, computed inflation the way Bureau of Labor Statistics did it in 1980, the true inflation rate would be 11.2%. That's without all the accounting gimmicks to make inflation look less than what it really is for us real people that use gasoline and eat food. And finally, I have to talk about Ron Paul. Now listen, I like Ron Paul. I think a lot of the stuff he says makes sense based on the facts. But I'm not going to tell you to go out and vote for him, because I'm supposed to be objective and unbiased. But I got to tell you, the reporting on the GOP straw poll last week was an embarrassment for anybody in the mainstream media. I used to work at ABC News and CNN as an investigative correspondent. I get how it works. And the bias against Ron Paul was so blatant, it was near criminal. These people should be embarrassed. And the bias came from, they just decided not to mention him. For example, Chris Wallace at Fox News Sunday, interviewed Michelle Bachmann for almost a half an hour and didn't even bring up Ron Paul's name. He only lost by 152 votes out of nearly 5,000 votes each. The second place winner, Tim Pawlenty, who dropped out of the race because he wasn't a viable candidate. I wrote about this last week. He had to drop out of the race. And then they said, Romney and Perry, who just got out of the race, they were front runners. Listen, Ron Paul got more than 4,600 votes. Perry and Romney didn't even get 1,000 each. And they're front runners? Okay, say what you want. They're front runners. But Ron Paul should have been categorized as a front runner because by the numbers, objectively, he is. And before I sign off, watch the video that Jon Stewart did. He pretty much summed it up. It was a tour de force on how Ron Paul basically got hosed. And that's the way I see it. I'm Greg Hunter. Thank you for supporting USAWatchdog.com.